In the continuation of the above video, now we are going to see brief of each sources of capital. First one is retained earnings. Retained earnings is nothing but profits generated by a company that are not distributed to stockholders, that is shareholders, as dividends, but are either reinvested in the business or kept as a reserve for a specific objectives, that is such as to pay off debt or purchase of capital asset. But there also we have some limitations on retained earnings. We have merits and demerits. Let's we see with the merits. Merits of retained earnings is a permanent source of funds available to an organization. It does not involve any explicit cost in the form of interest, dividend or flotation cost. As the funds are generated internally, there is a greater degree of operational freedom and flexibility. These are some of the merits of retained earnings. Next, we will see about the limitations. Limitations are like excessive plagging back may cause dissatisfaction amongst the shareholders as they would get lower dividends. It is an uncertain source of funds as the profits of business are fluctuating. Next one is the opportunity cost associated with these funds is not recognized by many firms. These are some of the limitations in retained earnings. Next we will see what is trade credit. Trade credit is the credit extended to you by suppliers who let you buy now and pay later. Anytime you take delivery of materials, equipment or other valuables without paying cash on the spot, you are using a trade credit. The merits of trade credit are it is a convenient and continuation source of funds. Trade credit may readily available in case the credit worthiness is of the customer is known to the seller. Trade credit needs to promote the sales of an organization. If an organization wants to increase its inventory level in order to meet expected rise in the sale volume in the near future. These are some of the merits of trade credit. Next we will see about the limitations. The limitations are the availability of the is very easy and flexible trade credit facilities may induce a firm to indulge in over trading, which may add to the risk of the firm. Only limited amount of funds can be generated through trade credit. It is generally a costly source of fund as compared to other most source of raising money. Next we see what is factoring. Factoring is a type of finance in which a business would sell its accounts receivable to a third party to meet its short-term liquidity needs. Under the transaction between both parties, and the factor would pay the amount due to the invoices minus its commission or fees. There are some merits in factoring. The merits of factoring are obtaining funds through factoring is cheaper than financing other means such as bank credit. With the cash flow accelerated by factoring, the client is able to meet his or liability promptly as when they rise. Factoring as a source funds is flexible and ensure a definite pattern. Limitations are this source is expensive when the invoices are numerous and smaller in amount. The advance finance provided by the factor firm is generally available at higher rates cost than the usual rate of interest.